This company inflated its profits by $11 billion, leading to one of the largest bankruptcies in history. And it all came crashing down because of this guy. You see, this is Scott Sullivan, the former chief financial officer of WorldCom, a company that was founded in 1983 and provides data, internet, and voice telecommunication services. Up until the late 90s, WorldCom was a decent-sized company, but definitely not a giant. But then in 1996, the CEO of WorldCom, Bernard Ebbers, wanted to expand the company internationally. So he made a deal with a British company called Mercury Communications, which gave WorldCom 20% stake in Mercury for $1.7 billion. But there was a problem. The deal made WorldCom a lot more valuable on paper, but it didn't actually bring in any more customers or revenue. So WorldCom needed a way to make their financials look better than they actually were. And that's where Scott Sullivan came in. In 1998, Sullivan created a new line item in WorldCom's financial statements called capital expenditures. And basically, this line item was a slush fund for overstating WorldCom's profits. For example, let's say WorldCom spent $100 million on a new network connection. Under normal circumstances, this would be considered an investment, which doesn't immediately benefit the company, so you wouldn't report it as income. Instead, you would capitalize it and then depreciate it over time. Basically, you spread out the expense over several years. But Sullivan decided to capitalize 100% of this expense and then depreciate it 100% in the very next year. This created a $200 million gain on paper, and WorldCom's profits looked way better than they actually were. Sullivan then took this $200 million and invested it in various projects like buying Mercury Communications, which made WorldCom look like a financial powerhouse. Investors loved it, and the stock price went up. But behind the scenes, WorldCom was bleeding money. They had billions of dollars worth of expenses that they couldn't actually pay for. So in 2002, they tried to get a loan for $4.5 billion. But when the banks ran a background check, they noticed that WorldCom was a fraud and they didn't give them the money. WorldCom then tried to get a loan from another company called the Bank of Scotland. But once again, they were denied because of their shady accounting practices. With no other options left, WorldCom filed for bankruptcy, which at the time was the largest bankruptcy in corporate history. As for Sullivan, he was sentenced to 100 hours of community service and 10 years of probation for his role in the fraud. I really hope that you enjoyed this video. And if you did, please make sure to subscribe.